Welcome. Today is June 10th, and I'm Jeff Hughes, Chief Investment Officer at JW Investment Partners and the editor of Alpha Insights. And this is your Daily Five. Daily Five is the show where we try and talk about the five most important charts to us and navigating this market. Well, we're going to do something a little bit different today. We've been talking about the market pretty regularly in our Daily Five presentations for the last several weeks, if not months. But today I'd like to get back to the basics. And I think what we'd like to do today is kind of talk about the anatomy of the perfect trade setup. This is real Stan Weinstein sort of stuff that we're going to get into. And so for the first slide, what I'd like to do is dig into how we find these trade setups. How do we find the stocks that are attractive at this point? It's not a random function. We're really looking for some specific criteria. We like to use the StockCharts advanced scan function and just some really basic criteria. We're looking for liquid stocks that have decent volume. We're looking for stocks in the US. We're going to narrow it down to those on the NYSE because the NASDAQ's really been the worst place to be fishing for opportunities. It's the worst performing composite index, where the NYSE is a little bit more chock full of blue chip ideas, if you will, and they don't necessarily have to be blue chips to be good opportunities. And we're also going to focus on stocks today that are making a new 52-week high. So that's really our main criteria. Especially in a down market. We were down 600 some odd points on the Dow yesterday. We're down 600 today. And, in that sort of a market environment, if a stock can buck that trend and make a new 52-week high, there's probably a reason for it. So the first screen has pulled up about 15 names for us to, peruse and get a sense of what's happening here. And we've got, a smattering of small cap, mid cap, and large cap names. So it's really all over the board. I actually happen to prefer small and mid caps right now relative to large caps. But, we're open-minded to just about anything. So this is our universe to begin with. And so for chart 2, we're going to do a little bit more analysis on this universe. We're going to take a deeper dive look at relative performance. And, relative performance is another way of describing relative strength. We want to look at those stocks that are the best performing, that are the strongest. And one way to do that is to look at performance over a variety of different periods. And so here we can rank these stocks based on year-to-date performance, for example. But we can also see yesterday's performance, last week's performance, last month's performance, last quarter's performance, the last 6-month performance, year-to-date, and 1-year performance, just using a simple tool that allows us to kind of just organize this. And we can rank it by any period we'd like, but we've chosen year-to-date. I think it's germane. But one thing that really jumped off the page to us is that, pretty much everything on this page, except for the bottom 3 stocks, are energy and materials names. And we all know that the resource names, especially the energy names, have been, basically leading the charge here. And many of them are, up radically. In the case of the Permian Basin Royalty Trust, it's up almost 400% in the last year and up over 100% year to date. And so things like that, it's more or less beyond our ability to catch the opportunity here because, it's already, there. We've missed it at this point for the, vast majority of it anyways. And so what we really want to find is stocks that are leading now, but haven't really, tripled or quadrupled over the last, year. And so the bottom 3 selections actually look pretty interesting to us. Allison Transmission Holdings, Penske Automotive, and Genuine Parts. And what's the common thread between those 3? They all have something to do with, the automotive industry, right? And so, we're going to dig a little bit deeper on those names. But first, I want to point out that, if we look at the year-to-date performance, Genuine Auto Parts is basically flat, but Penske and Allison are up, 14, 15, 16%. And if we look at the last year, Penske's actually up over 50%. And so Penske's got lots of momentum on a 6-month and 1-year basis. And if we look at the past 3 months, Penske's also leading, and it's also leading over the last month. So of those three, I'd have to say that Penske Automotive has really strong absolute momentum characteristics. But let's see how it stacks up on a relative basis to the S&P 500. So chart number 3 is going to take a look at our relative rotation analysis of this group of 15 stocks. And of course, it doesn't surprise to see that the E&P stocks and the pipeline stocks and even the marine transport names that are all energy centric are killing, right? Over the past 4 weeks, these stocks are really up a lot, and they are leading the charge in terms of relative strength and our expectation of continued relative strength. However, they are long in the tooth. In the case of several of the names, they're 120% beyond the S&P 500. And so one of the things that stands out again is that Penske and Genuine Parts are still fairly early in their relative strength leadership based on the algorithm that is used in the relative rotation graph. And so, we're nicely outperforming the S&P 500 by, 4 or 5%. But, we're still early in the charge. So again, we feel really good about those two names as potential opportunities for upside, even in a down market. Chart number 4 drills down a little bit more visually on these two names. So, what we're really looking at here is we're looking at how these names stack up on a relative strength basis, on a price action basis, and again, on the momentum of that relative strength. So, we're really, focused on momentum. We're focused on relative strength. There's a lot of other things that we could be looking at. There's many short-term measures, but this is a weekly range chart for each one of these names. And so it gives us a good, way to kind of look at them objectively under the same criteria. And the thing that just really jumps off the page to us is that both of these charts look great. But Penske actually looks slightly better. And what do we like about Penske versus Genuine Parts? Well, number one, it's fully resolved above that range consolidation. These are both multi-month range consolidations going back at least 6 months in the case of Penske, and a little bit further in the case of Genuine. But, the fact that we've fully resolved and, on multiple weeks closed above that range, that gives us a lot of confidence that Penske is really committed to an advance, whereby Genuine Parts is still struggling to close above that prior weekly closing high that was achieved in the first week of January. And so, that in of itself gives Penske kind of the advantage. But the other thing is, if we look at the ratio of these stocks versus their primary benchmark, in the case of Genuine Parts, it's the S&P 500. In the case of Penske, it's the Russell 2000. Penske's actually making a new all-time record high relative to the Russell 2000, whereas, Genuine Parts is making a recent high, but it's nowhere near its all-time high, which was achieved about 5 years ago. So, that gives Penske a little bit of an advantage here as well. And then when we look at the bottom panel, we can see this momentum of relative strength. And the thing that we really like here is that the momentum of relative strength is actually stronger with Penske than it is with Genuine, even though Genuine's a little bit further advanced in terms of its relative performance historically. So, Penske is really our standout here between the two. And so let's drill down in chart number 5 a little bit more on Penske Automotive Group and try and understand why this stock really resonates with us as being kind of the anatomy of a perfect trade setup. And I'm not even saying that this stock's going to perform. It's just the perfect trade setup. And what do we like about it here? Well, looking at the daily range chart, we can see that the stock is really resolved above this, classic, multi-month base formation. And the key word here is already resolved. Even though the stock's down today, yesterday it made a new 52-week high and actually a new all-time high, both on an intraday and closing basis. This pullback in our mind really just gives us an opportunity to step into the stock as long as it holds above some support levels that we'll talk about here in a second. But the fact that this pattern's fully resolved gives us the ability to project a measured target of about approximately $140 a share. That's about a 20% gain or so from where we're at today. So, it's better upside from this stock than we would have seen with Genuine Parts. Even if it had broken out, Genuine Parts might be a 17, 18% upside target. Here we're at least 20%, possibly, if we buy it a little better, that could help us. Now, the stock is also in an established short-term uptrend. So we've seen, the stock rally, pull back, and it's tested this uptrend at least 3 times, which allows us to use that as a support trend, right? And we've also got this 112.50 level, the prior low, that looks like it can also act as a short-term support. And so, using kind of the coalescence of those two levels, we're going to come up with a level of 112 as an initial stop loss provision for risk management purposes. And that would establish from the current level about a 4-to-1 positive risk skew. So, if we were to buy the stock at the market right now and set a stop loss at 112, we would have a 4-to-1 positive risk skew to our 140 target price. But I'm going to suggest something else here. I'm looking at the RSI, which is a short-term, 2-week sort of interim momentum gauge. And while we're in a bullish regime above the median line, we're still below the overbought levels and the prior highs. And if we look at the MACD, the daily MACD on the bottom has also started to kind of lose a little bit of its mojo, and it has failed to make a new high. So that negative divergence there is a reason to kind of pause and wait. And so for me, the ideal entry point here would be triggered by a daily close above 121.25. And if that close is confirmed by a breakout in either the RSI to an overbought level above 70% or the MACD making a new high, or preferably even both of them making a new high, this double confirmation, that would really give me a lot of confidence that the stock is getting up and ready to run. And we would be looking for a trade, to 140 versus our 112 level. So that is the anatomy of the perfect trade setup in our view. That's a Stan Weinstein, type assessment of the market here. We're looking for momentum, relative strength, and price action to really drive this decision. I want to thank you today for joining us. And if you'd like to get in touch with me, you can certainly go to my website, www.jwhinvestment.com, or follow me on Twitter at alpha_insights. I'm also on LinkedIn, or you can just send me an email at jhuge@jwhinvestment.com and let me know what's on your mind. Be happy to chat. Thanks again for watching, and good luck trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.